Good morning. We meet once again. Today is 16th of December 2024, and this is almost the last week of trading in this year. We know that the market is already pricing the rate cut in the US, and this is something that we've discussed many times before. But there are a few subjects that matters to us, and there's still a lot of opportunities that we can take advantage of. And as I told you before, we can benefit and have those free Christmas gifts at the end of the year. So let's talk about some of them and give you a hint how you can identify them. First of all, let's talk about China. China has been a focus for the news for the past few months. And we all know that there is a real estate issue, and we all know that they promised to increase the growth in China. And this is what the world is looking for eventually. If we have that, eventually the whole wheel or the cycle of the economy is going to be boosted, and we're going to start having a better year in 2025. This is what China promised, and usually what China promises, they do deliver eventually. So this is something relieving for the market, especially for the stock market as well. And they're a bit relaxed regarding that part. Now, let's put this one aside because there is a lot of competition and a lot of things that can happen when Trump is in the house. And we're going to comment on that at that time. Now, let's talk about the real estate issue. What we've noticed is that there is a slowdown in the drop of the prices in the real estate in China. And this means that we are getting, now, this is not 100%, but at least we're above 70%. That now we are getting to a certain point where the market calmed down a little bit, and the liquidity is going to start to focus on other markets at the same time. This is regarding the real estate, and regarding the growth, I already told you about that. There's a lot of opportunities as well in the Chinese market and in the technology sector, to be exact, especially with all the investments that's been done all over the world regarding that sector. Now, let's move and talk a little bit about the dollar index and how the market's getting affected. Now, dollar index is trading around, let's say, 106.80 or 82. And when we're talking about these levels, as I told you before, these are high levels for the dollar index compared to whatever the market is pricing. So the market is pricing that we're going to have a rate cut in the next 2 days. And it's been already priced in. Now, we've been getting a lot of positive or mixed data. Let's put it that way. Positive and negative news, but the positivity is kind of taking over the market. And this is something normal, especially in the holiday season. Everyone is in good mood. And despite if some of the people would like to close and take profit and close the year, despite the whole thing, we still notice that the stock market is still going up. And we are living the Santa rally until now, especially on NASDAQ. So for the dollar index, I go back. So if we're going to see any close above the 107, which is something that we failed to do before, then this is going to give us an opportunity to continue and trade to the next level, which is 108. If we do not close above 107, which is something most likely that's going to happen, a small correction before the news, and after the news, we're going to see how the market data will come up. Then we will see a correction until the level of 106.12. Despite whatever is happening, the major trend is still going up. Yes, we have a bit of slowdown. Last week, the closing of the week, it wasn't positive. The buyers were equal to the sellers. And this is something kind of like normal, especially nowadays. Let's see how is this affecting the rest of the market. Euro dollar, for example, has been trading in a range between 104 and 106. We still, until now, we could not close above 106, and we couldn't close below 104. And any close above or below is going to give us a better indication, either for the buyers or for the sellers, to take a nice entry with a very small risk and a decent reward. So this is what everyone is looking for, the less risky trades, so we can take advantage of the market currently. So at the moment, we've seen in the past 3 days, euro dollar bounce back from 104.50 And at the moment, we're trading around 105.20. With those levels, what we need to do is very simple. Just trade the breakout. You will take good advantage with the less risk possible. The market is going sideways, as I told you. Regarding dollar yen major trend is still up on the daily chart. We still couldn't close above the 154 or 153.80. Any close above 154 or 153.80 is going to give us like a headline so the market moves a little bit higher towards the 156.45, or even before that we have the 154.75. These are the levels if the market is going to close positively on the dollar yen. If we start a correction from here because of the news that's going to happen in the US, because of the rate cuts, which is something that is already expected and it should be priced in, and breaking the 4-hour trend line at the moment might give us a small correction to 152.40. After that, 151.67, and the major support around 150.75. These are the major support and resistance for the dollar yen. On the other hand, gold has been really generous and really good for us, and we've taken a lot of advantages of the move that we've had last week. I told you already last week, the break of 2,660 or 65, any close above that is going to be super positive, and below 2,600 or 607, this is going to be positive. This is going to be negative for the gold. So we waited for almost, I believe we waited for almost 11 bars, so which is 11 business days, but eventually we got a trade with a very low risk and a decent reward, at least 3 to 4 to 5 times even the risk that we've taken. These are the trades that the market gives you as a gift at the end of the year. So gold touched the level of 2,720. Yes, we did reach a high, which is 726, but we were not able to close above that level. So the reason that we couldn't close above that level, because we had a lot of take profit over there and a lot of selling position over there. And this is something normal because the market is still not convinced that we're going to continue buying gold at the end of the year without any consent, without any clear indication what's going to happen for the next year. Although they do understand that the policy of Trump is going to be inflation. It's gonna cause inflation in the market, but still, despite that, the market does not want to suffer from any big corrections before the market or gold start going up. So they're trading kind of like intraday and intra-week, and this is what I'm advising you at the same time. So now, those corrections that we've done so far, it's a decent correction. We broke the moving average 50, and we are almost heading to the moving average 100. The level of the moving average 100 should be 2,633 or 32. Now, those levels are very important. Now we're back into the range of the channel that I was telling you about. At these levels, just wait and see what's going to happen. If the market's going to bounce back up, that's amazing. You go with the flow. If it's going to get stuck within the range, you just can you can trade on a lower time frame and take advantage of the market. These are the support and resistance for gold in particular. In a quick brief regarding oil, I've told you last week as well that the levels of 67 and between, let's say, 65 and 67 are very good levels, and this is a very good support for oil. And I showed you from let's say 17 November or 29 October or even 27 September or 11 September. All of these touches that we've done, we touched the same support and then we bounced back from that. So when we notice the pattern in the market, we need to take advantage of it, especially if there is a very low risk compared to a very good reward that you might take in the regarding that matter. So this is exactly what happened. We bounced back from the levels of 67, and we reached the high for the previous week around 71.25. and this is a decent this is a decent profit or a decent trade as well. I hope you took advantage of that. At the moment, we are trading at the moving average 100 on the daily chart. Be careful. We still did not close above the level of 72. So from here, we might see some corrections, or we might wait for some data to be able to take advantage of the news that we're going to get. So at this moment, we relax a little bit, enjoy our profit. That's my Christmas gift to you. Enjoy it. And let's move to Dow Jones, S&P, and NASDAQ. Now, in NASDAQ, we know that some companies are joining nowadays, and those companies, they trade in cryptocurrency, and with the price of Bitcoin hitting the 106 or above 106,000, this is going to attract a lot of volume, and this is what the market's hoping for. But I wanted to focus on one thing. On the daily chart, the size of the candle is really small, and we don't have the big body of the candle. So the bullishness in the market started to slow down. And again, this is the last or almost the last trading week for this year. So be very careful with your trading. Do not get stuck in such positions. Try to close and to end your trades intraday so you can have a proper risk management. Regarding that part, we're going to talk in particular, of course, how the market and in my next show with Nour, we're going to talk how Jerome Powell and the Fed are going to affect the market. It's going to be in the next 2 days. Now, Dow Jones did a nice correction. We're almost at the moving average 50. Now we're trading 43,840, but 43,675 is the level of the touching basically the moving average. Eventually, we don't need to touch it. It's a zone, or it's a level where it's well supported. Usually, we see some reactions from this level. So this is a good advantage for you guys. The major trend is still up, and we still have some space as well to do a correction to the levels of 43,000 and after that 42,733. Those levels are important. Why? Because breaking the 50 moving average might lead us to the 100 moving average. Regarding the news, everything is priced in already. The market already understands the market data that we're going to have. We have some data in Europe and in the US regarding the manufacturing producing index. So this is something that you can benefit from as well in this week. And there is some data where we're waiting, and especially the Fed decision, that's going to be the focus of this week. These are the major points that I want to discuss with you. Of course, S&P, as I told you, the major trend is still up, still trading within the range, but you're going to notice that kind of we are heading to the end of the triangle. The trend is up. We all know that, but the volumes are getting a little bit tighter, or basically the movement on the market is getting a little bit tighter, which creates an opportunity as well for us, because any breakout from those levels will lead to decent profits in the market. And when we make a mistake, those small mistakes that we make, it's easy to control them if you have a decent risk management. So that's why all I want from you is just a simple thing. Make sure that you have a tiny stop loss with a decent and a big take profit. This is just as a beginning. I thank you very much for attending, and I'll see you next week. If you have any questions, you can DM us. Thank you.